I got thinking about the infinite banking concept and how awesome it is, but I also got thinking about how many people make mistakes. Because the infinite banking concept always works, right? Well, yeah, but the mistakes that people make are simple. So I wanted to do a quick video to talk about all the mistakes I see people make with the infinite banking concept, or what they call the infinite banking concepts. So let's start with one of the most common. Someone gets the idea that they want to start the infinite banking concepts because they want to take back control of their banking functions. In other words, they don't want to keep paying the bank's interest and principal. They want to pay themselves. I mean, that just makes sense, right? So they go out there, they get the policy, but once the policy, and just let me quantify that, the specially designed and engineered whole life insurance policy from a mutually owned life insurance company that pays dividends. I don't mean to have to do that, but some people don't know what the policy is. And that's what we do. We change where our money goes first. We put it into this specially designed whole life, but that isn't where it ends. And that's mistake number one. People think that the policy is what's going to make them wealthy, is what's going to make them, take back control of their money. Now, it's better than what most people are doing with their money, which is putting it in traditional banks, maybe CDs, money markets, things like that. The place where you put your money and then you invest from there. That is certainly an improvement because the policy pays you higher guaranteed interest, dividends in a tax-free environment, protected from judgments and liens, and also gives you a death benefit to protect your family. So if we combine all those and we compare that to your bank account, that's certainly better than that. But it's only slightly better. So what mistake do people make? Well, they stop there. They think that's it. They think I just get one of these special holy grail whole life policies and I put my money in that because that's what they say, right? Change one thing and that's where my money goes first. Yeah, but that isn't the whole part of it. That's just step number one. Because the most important thing about the infinite banking concept is making your money go to work. Because the policy is going to pay you interest and dividends regardless of whether the money's in the policy or out working for you. Wouldn't you want your money working for you twice instead of once? Yeah, exactly. So here's step one. When you get your policy, or even before your policy is set up, know where that money is going to go to work. Now, the first place to always start is, do you have any debt? You got any credit cards that are lingering out there? Car loans lingering? What debts do you have? Let's reorganize those debts. Let's write them all down. Put them into an Excel spreadsheet. Have ChatGPT do it. Just talk to it, and it'll organize your debts. Now make sure you have ChatGPT or whatever AI you're using, organize them in the most efficient way to pay them off. Or actually, you know what? Just use the Vault software. It does all this in the Debt Blaster. And you can get the Vault by going to BYOB vault.com. It's an amazing software, but let's not make this about the Vault. I was just trying to explain that when you put your debts in order, usually it's lowest balance to highest balance. So then what we need to do, and let me just show you this on the screen. It's just a circle. It's kind of like Monopoly. Your money is in the policy because you've already started the policy. Then what we're going to do is take a loan from the policy and we're going to have that money go over and start paying off your debts. Lowest one first. Now, once the debt's paid off, this is mistake number two. People get this far and they start paying their debts down, but then they're like, hey, I paid my debt off. I'm good. No, you're not. You paid their bank off. Now you got to pay what you paid their bank, pay back to your bank. Now, I know that was probably a lot, but let's just say we covered the first part of the circle. The money now paid off the debt. But let's go back and look at that debt you just paid off. How much were you paying that debtor, that credit card or whatever debt you paid off every month, right? Let's take that amount because that amount represents whatever the interest rate they were charging you. And let's pay that exact amount back to your policy. Or what I like to say, let's pay that amount back to your private banking system. So if we just draw this, right? Money went across the top and it paid off that debt. We took the amount you used to pay that debt and we now bring it around the bottom part and we put it back into the policy. Because what you paid them is what you're going to pay yourself. Why would you pay yourself anything less than what you were paying their bank? You now have a banking system. Don't cheat or steal from your banking system. So now what we've done is we've completed the circle. This is the most important thing about the infinite banking concept. We call it the recycle, recapture phase. And that's where the money went from their bank back to your bank. Now what we want to do is we want to keep your money working for you. Now I know a lot of people say, well, my money is working for me. It's in the policy. It's working for me. Right. It's working for you once, making compounding interest and yes, uninterrupted compounding interest. Because when that money went out to pay off that debt, the money didn't leave your policy. It's still in there, earning uninterrupted compounding interest. But just because you put the money back, the goal is not to put all the money back in the policy and just leave it in the policy. The goal is to figure out where it goes next. I don't know, cars? You're always going to need new cars. Your spouse is going to need a new vehicle sometime. Your kids eventually will need new vehicles. Maybe your kids are already out of the house, but you get the point. Most people always buy new things. Now, when you buy new things, you need to reframe this in your mind because this is another mistake people make. They think the goal is ended when you take care of the first goal, which was paying off your debt. But that's just when it begins. Once you pay all your debt off, great, now we've got all that extra cash flow that we want to have that money go work for you again. So after you pay off your cars, after you pay off your debts, maybe even pay off your house, what's next? Let's talk about investing. How do you invest money now? Well, I'll tell you how most people do it. They put that money either in their brokerage account or their bank account and they invest from that. Ooh, I want to invest in NVIDIA. I want to invest in Apple. Not making any recommendations, just two common stocks that have done quite well that people recognize. Okay? When you want to invest in stock, what do? Well, you move your money into a brokerage account and then from that brokerage account, you invest in the stock. And then whatever the stock earns you, where does it go? Back to the brokerage account. Who's in control of the money? The brokerage account, really, because they're holding all of your money. So what if you did this? What if instead of the money starting from the brokerage account or the money market or the bank account, what if it started from the policy? You then took the money from the policy, you invested in the stock. If it was a dividend paying stock, every time you got a dividend, what if we took that dividend, we rolled it back in, we recycle and recapture the money that normally would stay at somebody else's bank? We just recapture it back to yours. You see, there's so many reasons why you'd want to do this, but one of the most important reasons is you want your money continuously working for you. And why not keep your money working for you in things you know, like, and understand? Now, most of you know your debts. You don't like them, but you understand them. You're the one that racked them up. Now, that's something you know, like, and understand, right? So let's apply that to everything. Whatever you invest in, only invest in things that you know, like, and understand. If you don't know enough about what you're investing in, research it. Use AI to research it. Learn as much as you can to get your knowledge up to a level that you fully articulate and understand that. And once you do, let's put more money from the policy, your banking system, into those investments. You see, these are the things that people screw up with the infinite banking concept. It's not about the policy. It's about the process. It's about moving your money around that circle as many times as you can. That's right. When you want to buy that new boat, that new ATV, that new dirt bike, that motorcycle, all those things, you want to think that they are going to be financed through your banking system. Now, hold on. I know that's not feasible for some people because you don't have enough money in your banking system to fully pay for the item you want to buy. I get it. So maybe what you do is you use traditional financing, but you set up a plan for your private banking system to expire that loan that you took from their bank. This is another way you can improve your situation without hindering your lifestyle. Because some people are like, I want it now. I know. Your way, right away, right? That's the life we live. So buy the boat, the car, the motorcycle, whatever it is, using regular financing. But change where your money goes. Put it into the policy, your banking system. And then quarterly, and I want you to do this quarterly. The Vault software will do this automatically for you. But if you're not using the Vault software, then you're going to do this every quarter. You're going to take whatever money is in your cash value and you're going to move it around and you're going to pay down, not off, pay down that debt. Okay? And now when you pay down that debt in chunks, you might have a reduced monthly payment, but you might not. If you reduce the monthly payment, if it went from $500 a month to $400 a month because you chunked down the debt, take that $100 that you saved and recapture that. But if it doesn't, like a car loan, If you chunk down a car loan, it doesn't create any additional cash flow. Your monthly payment's the same on that car, whether or not you owe 20 grand or 5 grand. You all know what I'm talking about? So what the goal is to pay it off as quick as possible. So get as much money as you can in your private banking system. Chunk down that debt. Chunk down that car payment or boat payment or motorcycle payment. And then when it's paid off, take the full payment you used to pay them, move it back over. These are the mistakes people make. They forget why they started this policy. They forget what the infinite banking concept is. And they revert back to the common denominator is, oh, infinite banking must just be this policy that I put my money in. Wrong. The infinite banking concepts is the process that we just went over and over. And some of you are like, you keep saying the same thing over and over. I know. That's intentional because you got to hear it more times than one. You got to move your money around the circle. Let's pause. You remember that game Monopoly that we used to play and maybe still do? What was the purpose of that game? You all started at go. You roll the dice and you go around the board. And I know the first couple times your goal is to get past go to get that $200. It's kind of the same thing with the policy. In the first couple of years of using the infinite banking concept, sometimes it can be slow, right? Maybe your goal is just to build up your private banking system, to capitalize it. And maybe that does just take a couple of years where you pass go. And passing go in policy is just when you turn 1 year old, when you get to your policy anniversary, because then you get paid your dividend. Dividend is like the $200 for passing go. But once you start building up some money, same thing in Monopoly. What was your goal? It was to find land, right? You started buying land and then you put houses on it. And then you upgraded the houses with hotels and motels. And I can't remember all the things, but that was the goal. So that when somebody stopped and landed on your property, they had to pay you rent. And then that's how you won the game. Well, that's how you win the game of infinite banking as well. The game is won when your money is out working for you, investing in things you know, like, and understand. But please don't make this mistake. Don't invest money from your private banking system when you have debts that could be paid off. Because the debts are typically a higher interest rate than what you're going to make investing it. They carry no risk to pay your debts off, where when you invest money, it carries risk. This is another big mistake I see with the infinite banking concepts. People get excited. People get excited about private money club and the private lending opportunities on there. And I get it. It's hard not to get excited when you see the returns of 12, 15%. Now, those are going to vary depending on what deal you look at, but that's pretty common on there. So when you're looking at the money building up in your policy, in your private banking system, it's not hard to get redirected or kind of confused about where that money should go. It should always pay off debts first, even if the debt interest rate is lower than what you could make by investing the money, because it's lower risk. And you must take back the money you're giving away first before you start deploying money, investing it in things that involve risk. Because if one deal goes bad, now all of a sudden you got the debt, plus you lost the money for the deal that went bad. Now, you should never lose all your money in lending, because you should always be first position. You should always be on that mortgage in numero uno position. Now, I'm not giving any investment advice or giving you recommendations or suggestions. Watch the videos that we have on how to protect yourself in that. It's common sense. The banks, when they lend money to you for a piece of real estate, do they not put a mortgage on that house? Are they not in first position? Yeah, almost 100% of the time. And most of the time, they make you personally guarantee it. So in this scenario, when you are creating a banking system, you need to think as if you are the bank. This is another mistake. People, for some reason, think that just because it's their money, they can go out and violate the rules. The rules are simple. If the bank does something, well, then copy what the bank does. They've been doing this for hundreds of years. So if the bank takes a first position on a mortgage, okay, when they lend money to somebody for a piece of real estate, do the same thing. If the bank wants monthly payments back, do the same thing. Copy the bank's interest rates. Do all the things the bank does. You see, that's some of the ways where you won't make mistakes. Let me give you an example. Let's say you were going to buy a car. I'm just going back to a thing that all of us will do. And you have the money in your policy to buy the car. What interest rate are you going to charge yourself? because it is yourself, right? You are the bank. Well, how I do it, and it's not always how everybody does it, but I'm gonna show you how I do it. I go out there and I look for all the banks and what they're charging on car loans. So let's say I'm buying a car and I'm gonna go out and I'm gonna look at Ally, I'm gonna look at Bank of America, I'm gonna look at all the banks. And there's websites that do this, like bankrate.com. They'll scrub the whole lending community for the lowest interest rate. Great. Let's say the lowest interest rate out there for a car loan is 6%. Am I gonna charge less than 6%? Well, I don't. If the lowest rate I can get out there on the street from a traditional bank is 6%, I'm gonna repay my bank back at exactly the same interest rate as they would charge me and the same monthly payment. So if that 6% car loan was $600 a month, how much do you think I'm setting my policy up to be repaid? That's right, $600. I fill out a loan repayment form for $600. Now, I just told you another mistake people make. They don't follow through. They don't treat their money the same way they would treat other banks' money. In other words, if you would pay $600 a month to them, you should pay yourself back $600 a month, no matter what the interest rate is. And not only that, make sure that when you take the loan from your policy, you also complete the loan repayment form. And in that car loan, that $600, you would complete a loan repayment form for $600 a month. And you can set up the repayment date as any day you want. The 1st, the 15th, the 20th, it doesn't matter. You're in control because you're the bank. You see, these are just common mistakes that people make. But another mistake people make, and this is a big one, folks, is they forget to subscribe to this channel. So click that little subscribe button right above or somewhere on your screen. There's a little bell. Smash that bell. Hit the bell so you're notified every single time I put up new content. Because this is just the beginning for some of you. You're hearing about the mistakes people make. You don't want to make these mistakes. And one of the ways to not make mistakes is to watch more videos showing you ways to use this. Because listen, it's easy to use the Vault software to pay off your debt, to buy major purchases, or even for investing. That's called the gains projector. It will do all that. But if you're not using the software, then you're going to need to learn how to do this. And you know what? I think you should learn how to do this anyway. Don't cheat the system. Listen, I think a lot of people use AI because they don't want to do the work. I think it's important when you use AI to understand what you're telling AI to do so you're the boss with AI, not the other way around it. But a lot of people rely solely on AI to give them the answers, and they don't even know if they're true because they have not learned themselves how to do what they're telling AI to do for them. I guess that's a mistake that you can make too. So don't make that mistake. Either get the software, BYOvault.com, or learn the right way to be your own bank. Because it is quite simple. To be your own bank, all you need to do is think as if you are the bank, and then just copy what a bank does. Because I'm sure you've deposited money in the bank. I'm sure you've taken loans from the bank. I'm sure you've paid loans back to the bank. And I'm sure most of you remember the forms you had to fill out. And if you don't, ask ChatGPT. Say, hey, if I were to take a loan from the bank for this, what forms and what things would I need to fill out for them? And it will tell you. Copy it. Mimic it. Even in the Vault, we have promissory notes in there that you can use as a sample. Anyway, I'm going too far here. I hope this was helpful to help you understand what mistakes people make when they become their own bank. But you're not going to make them anymore. So with that, I got one final thing. You don't want to make mistakes? Watch this video right here. Secrets of the Wealthy. You see, they've learned it, and so should you. Thanks for joining. We'll see you on the next episode.